Welcome back to another video. Alibaba, we are currently unrealized negative $50,140. Yet, in this video today, I will be sharing with you why I think Alibaba in the long run is going to potentially be a winner. And so long that we are basically holding at these levels, I do believe the upside through enough time will start to play out, and Alibaba, and not only Alibaba, China as a whole will be a nice place where essentially most of the markets are currently under allocated, right? So any asset manager is basically not going to touch Alibaba. I've spoken to many, and they have sympathy for my willingness to look retarded in front of other people, which I find quite enjoyable. So I will happily be wrong on a position, and currently Alibaba, if we are to look at the P&L, this would show that I am currently incorrect, but yet the thesis has not played out, and the time horizon is much larger than what everybody essentially wants when they're in the markets. So basically, China as a whole is very undervalued relative to most of the world, but primarily I would say the Western side of the world. And if you consider the technological advancements and the agreements that they have with their people and the difficulties that they are currently facing right now, and the unwillingness of asset managers to allocate capital within this country, all of these things overall in a long period of time should prove out to be a positive thing if we look at basically any contrarian value play, right? So that's the nature of the markets, in my opinion. The US markets are absolutely rocking right now. The momentum is there, but that is what actually allows quote unquote value plays to work, because people get distracted, see the shiny object, and then the companies that are under the radar, that are priced relatively cheap compared to the rest of the markets, or quite substantially cheap relative to the rest of the markets or the rest of the asset classes around the world. Alibaba, or China as a whole, in my opinion, has plenty of very attractive opportunities. And basically, from a very high level analysis, well, one key thing that came out today is Trump discussing tariffs on China at a rate of 10% starting February 1st, which I have heard asset managers, and I believe because this was stated once through Trump's very loose mouth, which was that the U.S. would place 60% tariffs on all of China's goods that are coming into the country. So basically, if Trump said that, asset managers would have to price that in over the last year at its worst. And now we are seeing Trump state that he will likely announce a 10% tariff starting February 1st, which in the grand scheme of things is very light if we look at how he is dealing with his northern and southern border nations, which basically are implying a 25% tariff for Canada and Mexico. So Alibaba, or China as a whole, had priced in very aggressive tariffs. Not only that, a non-mutual political relationship with US and China. But from what we're seeing, it looks like Trump is very pro-China and very respectful towards other world powers on this stage. So that's kind of just like the big zoomed out picture. And I think once the world starts to understand that there is less tension between these two nations, then China will start to look more attractive just in terms of potential upside relative to the downside. And that is why my business partner and I are positioned in Alibaba and a few other companies which will benefit from China's uprising, right? So right now they are in, to me, obviously it's not an exact comparison, but it is a very similar tune to what we heard in the 2008 financial crisis that we had in the US. We are experiencing similar similarities within China. And basically, China has stated that in 2025, they plan to have a moderately loose fiscal policy. And to me, once they announce that they are going to do stimulus policy towards the economy, then that is when the markets will start to realize and actually trust that the stimulatory pressures are going to result in inflation within China, which the inflation in turn will boost asset prices, right? So the way that I'm seeing it is stimulus has always been expected to come in. Now China is waiting to see how aggressive Trump will be in order to actually calibrate how aggressive they will be in terms of stimulating their economy. But the main factor as to why I believe that prices couldn't hold up their runs after they have been after the main reason why I believe Chinese names haven't been able to continue to rally post announcement of any sort of looser fiscal policy was the fact that the US and China didn't have a positive relationship, and there was worries towards Trump's aggressiveness towards China. Now we are seeing that it is a lot lighter than what the markets have been pricing in. Therefore, the markets can very likely be wrong. And if the markets are wrong, then you want to be positioned for them to be wrong and for everybody to want to eventually enter China because the opportunities there and the earnings that you're getting are actually paying off. So that being said, I'm kind of rambling here. It's off the top of my head, but let's go into the chart. China, very simple. The way that I like to see this is now that we have basically come down from this 300 level. This was obviously 2020 vibes where basically full-blown stimulus within the US pushed up all asset prices, and Alibaba is an ADR, so obviously there's going to be flows into this company from all these stimmy checks. But regardless of the fact, Alibaba has come down from 300 all the way down to $60, insane. And now we have been basing for the last 2 years, right? So could just put simple lines here. Could put another line there. And basically, I would expect for Alibaba to trade within this channel for enough time to eventually break out above 120s. And once that happens, in my opinion, we can go up to 150, 180, even up to 200. So you can clearly see why, despite us not having the best execution in terms of averaging in, we still have ammo and buying power in order to increase our exposure on this position. And on top of that, the upside is always higher than the downside if you're looking at holding a company for the long term, because all you could lose is 100%, and you could make multiple hundreds of percent on the way up. So it just makes sense to be long. Alibaba, basically, even if this does go to 70, even if this does go to 60, I think that would be an opportunity to add at the low end of this range, right? Bring our average down to below 100. Obviously, it's not the best average, but once again, this is one of a few other positions, and the size relative to other positions aren't so aggressive, yet I have a strong conviction on Alibaba. I'm willing to add if prices get lower for the anticipation of the breakout above 120s. And if that is the case, I think basically we are in the driver's seat after that, and we just ride this position for as long as we can, or until another position makes more sense and has more upside. So basically, that's the thinking for Alibaba. Obviously, very high level, but just looking at the big picture, as we have done with many other trades. Um, if you enjoyed the video, subscribe and like.